Good morning to all. Today I am going to teach plus 2 accountancy first chapter, that is incomplete records. Incomplete records. In any business, maintain of accounts is very important. Accounts is very important for even it is a small scale business or sole trader business or partnership firm or large scale business like companies. Accounts is very important. In accounts, there are two systems. One is called single entry system. The other one is called double entry system. Single entry system, it is prepared only by the sole trader or small scale proprietors or partnership. In double entry system, it is prepared by large scale business like company. So single entry system means they used only one side or only two accounts. One is cash account, the other one is personal account. Double entry system, they use two aspects. Reason, in accounts, any transactions, there are two aspects. So now first you must know the meaning of incomplete records. Incomplete records means it is like a single entry system. They did not maintain various types of accounts. They maintain only two accounts, that is cash account and personal account. So this is the single entry system. In double entry system, they maintain accounts under the section 128 of 1 of Indian Companies Act 2013. This is a very important point. Right. What is the features of single entry system? What is the features of single entry system? The first feature is nature. Under single entry system, it is not scientific and unsystematic. The other point is, it is not maintained by accounts of principle or accounts standard of accounts. This is the nature of incomplete records. Number 2, types of accounts. Under single entry system, they prepared only two accounts. One is personal account, the other one is cash account. Third one is lack of uniformity. In single entry system, there is no uniformity. They only want two aspects or two items. One is opening capital, the other one is closing capital. The fourth one is financial statement may not represented true. The financial position prepared by the single entry system, it's not true. The fifth one is suitability. The single entry system suitable only for the sole trader concern or partnership. That is the other important features. Next, last one is mixing the items with business transaction, personal items. சில நேரங்களில் பார்த்தீங்கன்னா personal, the proprietor purchase goods for its own family. This expenses included in the business. So this is mixing. This is the mixing features of incomplete records. The next point is limitation. What are the limitation of incomplete records? The first limitation is lack of proper accounts maintained or lack of proper maintained records. In single entry system, they did not maintain proper accounts like double entry system. This is the first limitation. Second limitation is it is difficulty in preparing trial balance. It is very difficulty to prepare trial balance. The reason is they maintain only two accounts, that is cash account and personal account. The third one is difficulty in ascertaining true profit. True profit, we can't fix or we can't calculate true profit in incomplete records or single entry system. Under single entry system, we cannot find out proper profit or loss. The other one is also same. It is very difficult to find out financial position. Next one is error and frauds. We cannot find out easily. This is also very important limitation of incomplete records. The last one is unacceptable by the government or tax authority. So these are the limitation. The features and limitations are given in the textbook. So you go through in textbook, it is very easily understand what is the meaning of incomplete records, what are the features of incomplete records, what are the limitation of incomplete records. This is the introduction or theory point of the incomplete records or single entry system. In incomplete records or in single entry system, there are two methods. One is net worth method. One is net worth method. The other one is conversion method. In single entry system, there are two methods. One is called a single entry system, a net worth method. The other one is called conversion method. So in net worth method, we must require only two capitals. One is opening capital. The other one is closing capital. we require two capitals. One is opening capital, the other one is closing capital. If you know opening capital and closing capital, we can easily find out profit or loss of the concern. So this is called a net worth method. Okay, net worth method, right? Then in net worth method, we must prepare three statements. Under net worth method, we must prepare three statements. We must prepare three statements. One is statement of affairs. One is statement of affairs. The other one is statement of affairs. The other one is statement showing profit or loss. So this is a very important. So you must prepare, or you want to calculate profit or loss under net worth method, you must prepare three statements. You must prepare three statements. First statement is called statement of affairs. Why we want to prepare this? To find out opening capital. To find out opening capital. Then next one is statement of affairs closing. Statement of affairs closing. So first statement, statement of affairs opening. Statement of affairs opening, statement of affairs closing. In statement of affairs opening, to find out opening capital. Then statement of affairs to find out closing capital. If you find out opening capital and closing capital, then you must prepare statement showing profit or loss. Statement showing profit or loss during the year. Okay, right. Now you must know, or you must keep it in your mind. What is a statement of affairs? What is a statement of affairs? It's a very simple. Statement of affairs means it's purely balance sheet. That's all. Statement of affairs means it's purely balance sheet. In single entry system, you must use the term statement of affairs. You won't, or you cannot use balance sheet in single entry system. The same thing in double entry system, you can't use the word statement of affairs. In double entry system, you must use balance sheet. So in double entry system, you must use balance sheet. In single entry system, you must use statement of affairs. All other same. It's a purely balance sheet. You know what is balance sheet? Liabilities, assets. In double entry system, you must prepare balance sheet, liabilities, assets, the same statement of affairs. You put all liabilities item in liability side, you put all assets item in asset side. That's all. There's no any difference. Only one difference, only in the name. So statement of affairs opening, it's a purely balance sheet. Statement of affairs closing, it's purely balance sheet. But in single entry system, you must use the term statement of affairs opening, statement of affairs closing. If you find out opening capital and closing capital, then you must prepare statement showing profit or loss during the year. That's all. Statement showing profit or loss during the year. Okay, right. Today I am going to give the format of statement showing profit or loss. Please, you note the points in your accounts notebook. So, you must take single side. First heading, statement showing profit or loss. Profit or loss here during the year. Even you take this column or this column, there's no any strict rule. So first you must start closing capital, then add drawings. Even if you want, you write like this: drawings during the year. Next, less additional capital. Closing capital, add drawings, less additional capital. It's adjusted closing capital. It's adjusted closing capital. Then here less opening capital. So profit or loss during the year. That's all. This is the statement showing profit or loss. Important points. First starts with closing capital. Add drawings during the year. Less additional capital. If you want, you write like this: less additional capital introduced during the year. So the balance is adjusted closing capital. From this, here less opening capital. So the answer will be profit or loss. Okay? So this is the very important. So first, under single entry system or net worth method, first you must prepare statement of affairs opening to find out opening capital. Next, you must prepare statement of affairs closing. So you find out closing capital. If you had already find out opening capital and closing capital, you can prepare statement showing profit or loss during the year. In this statement, you must start closing capital, add drawings, less additional capital. The balance is adjusted closing capital. Then less opening capital. So you can get profit or loss. This is the net worth method prepared by sole trader or partnership or small scale traders. Okay, understand? Any doubt? So very important for the problem, you must keep it in your mind. There are three statements. One is called the statement of affairs opening. Number two, statement of affairs closing. I had already told both are purely balance sheet. Both are purely balance sheet. They are given opening items, liabilities, assets. If assets, you put in asset side, liabilities, you put in liability side, and close the statement of affairs, you can get balance. That balance is called a capital. If you prepare opening, that is opening capital. If you prepare closing, that is closing capital. If you had prepared opening capital, you had already find out opening capital and closing capital. Then you prepare statement showing profit or loss during the year. In this statement, starts with closing capital, add drawings, less additional capital, the balance is adjusted closing capital, then less opening capital, you can get profit or loss. So this is the first day class, only theory side. Next class I am going to take problem. Okay, today you note all the items in your accounts notebook and read and keep it in your mind. Don't mug up. In accountancy, please don't mug up. Only simple net worth method. Only three statements. Statement of affairs opening, statement of affairs closing, statement showing profit or loss during the year. The next point, statement of affairs means it's a purely balance sheet. In net worth method, the last item, statement showing profit or loss during the year. In this statement, there are four important points to be kept in your mind. One is closing capital, add drawings, less additional capital, the balance is adjusted closing capital, next less opening capital. So you will get profit or loss. Okay, thank you. If you like this class, you give like or subscribe. Okay, if you want any doubt clarification, please call me. I will help you. Okay, thank you. We will meet in next class. Thank you.